which came in on Friday after market closing hours, that scorching 7.8% figure, which raised some issues around the deflator. But the NSO sources have told CNBC-TV18 that worries of a low deflator are overstated. Now, this comes the day after many economists and media reports said that India's higher than expected GDP figure of 7.8 compared to estimates of 6.8 may have been because of the deflation method. Lata is here to break this down for us. Lata.
Well, I spoke in detail to several top sources in the National Statistical Organization, the NSO, and they say that their calculation method is not at all incorrect, and in fact it is endorsed by the IMF year after year. It's among as good as anywhere. Now, let us address the worry itself, which is what I asked them. The analysts' worry is that India's Q1 real GDP is at 7.8 and nominal GDP is 8.8. Normally, the nominal GDP is real GDP plus inflation. So this gives a very low inflation or deflator of just 0.9%. This is the worry. Now, NSO sources first said that, it is not as if we collect all the goods and, value addition of all goods and services at the nominal rate and then deflate it. That is not the way it is done, which seems to be the misunderstanding. They say for a large number of the products, like at least 50-55%, for instance, agriculture, mining, electricity, the consumer durables, they have the volume of goods. Just like last year, this year, you have amount of crops produced, amount of electricity generated. So it is at constant. The value added is a constant. And to that, you add the CPI or the WPI, more likely, and get the nominal GDP. So it's not as if you're deflating it from the current prices. You have the constant volume produced. That is in the case of public sector mining and all those. Where is it that you get the current prices, nominal GDP, and then deflate it? These are the sectors. Private mining. Private sector mining, you take it from BSE, NSE data and then deflate it. Then likewise manufacturing. Manufacturing companies also you take BSE, NSE data and corporate. That's basically corporate data and deflate. Trade, retail trade, again you have to go with the company data. Real estate, you go with the corporate data. Finance, like RBI releases deposits, credit data. Public administration, you have what the CAG releases or the Ministry of Finance, revenue data, services tax data. And even health, education, what you do is you take services, the service tax paid on education, on health, and then you deflate it. So there, how are you deflating it? WPI or CPI? That becomes an issue. And so, there is no wholesale price for education and health. You have to take the WPI, which is a manufacturing-based WPI. So, there can be an argument, but what is the option? Some of the countries use PPI data. That is producer price index. What is the producer price index? It is different from WPI in the sense it is the price at which the producer is getting the inputs. There the transport, logistics, warehousing is already included. So some of the services is accounted for. In India, we don't have that PPI data. So you may argue with that manufacturing, with some of the inputs as not being deflated adequately. Likewise, there is double deflation applied in some countries. For instance, in manufacturing, they deflate the input prices, output prices separately, and then get the value added. In India, the NSO only deflates the output prices. So there is an argument that if the input prices are very low, you're probably overstating manufacturing. Many economists have said that about the Q1 GDP. So, it is only for about 45% of the inputs that this argument of deflating from current prices comes. It doesn't come for a larger part, about 55% of the data, NSO sources told me. And they also saying that February 2026, the revamped GDP, revised GDP is going to come in. There, they're going to address the PPI issue. They're also going to address the double deflation issue, which in any case, they're saying in many countries, it's not as if they do double deflation of all the companies. They do of a sample companies and extrapolate. So they're going to do that as well. Also, the CPI basket is going to be recast to have more services. The current basket was designed in 2012, when the average Indian household didn't consume so many services. It largely consumed food. Now people are better off. We are consuming services. So the CPI basket from 199 service items is going to have 400 service items. And therefore, a much better CPI basket is in the works. the issues are minor, are smaller for a small part of the GDP, and therefore we should not cast too many aspersions on the GDP data.